Hello everyone and welcome back to another video. My name is Noah and this is your market update for the week. So diving right into it, let's start with the stock market that had a really great last 2 weeks, up 30% from the lows. Now, there are a lot of people who might be wondering if the bottom is in, and for me personally, what I think is going to happen is just based on the state of the world and everything like that, I think that we will either see new lows or we will come back at least back down to this kind of area where the blue line is to retest the lows. And so the reason for that is I think that a lot of optimism came out into the market. Trump came out and said that we're implementing plans to open up the country again. But looking at the stats, I don't think that's too realistic. You see, we had a peak in cases early in April, which is good, and the number of new cases are declining, but the number of active cases still continues to increase. We have not passed the hump, if you will. Here I'm looking at Spain. Spain had peaked out around the same time, you could call it late March, early April, and we've seen a decline. But in countries such as Italy, where they actually had the peak earlier, March 19th, or 20th was the peak, and now it's April 20th, and they still have a lot of active cases. And again, their number of active cases are not declining either. So I think that just looking at these two other countries, I think that the quarantine in the US will be more extended than maybe the market is pricing in. And there are further risks, again, of the virus having a resurgence, right? So if we allow everybody to exit quarantine and then there's another spike in cases, then we might have to reinstate the quarantine and we'll have an economic shutdown, and I think that would be really bad for morale. So, but in the next 2 weeks or so, maybe we head lower from here. Maybe this is the top. I don't know. Honestly, I'm trending more towards another week higher to really trap people and create FOMO, fear of missing out. People are going to think that we're going to break out to all-time highs here. But really what we're going to do here is roll over, and then that's when we'll start a new decline. I'm looking at September, October, August as my time frame, as a buying opportunity to then get into the markets and hopefully see a recovery from there. So obviously I'm not trying to predict the exact price movements, but this is more or less what I'm looking for, and at least from there we can reevaluate what is the right move to make later in the year. And so this price action is also supported by seasonality, right? So this is the S&P 500. Seasonax is the website that I'm on, and what this website does is that it analyzes the seasonality of different assets. So for example, in the S&P 500, from June to March, it's typically not such a great time, but then from March to May, we have a good season, if you will. Then we hit the summer doldrums, and then we typically, most market declines or crashes, if you will, occur kind of in September, October, and then it's off to the races with the Christmas rally. So I'm aligning myself to history. This is a 20-year average, right? And so I'm just trying to add more factors that are going to support my trading decisions. Further along, looking at the stimulus packages, actually this economic disaster recovery loan that was going out to small businesses, they say that they've actually run out of money. Stimulus checks have started to come in for most people, and if you have direct deposit, but $1,200 I think is not really that much money when most people's rent are either that or above. And as such, I'll be very interested to see how this all plays out if this quarantine is extended longer than people expect. I think the government will jump in and try to actually give more stimulus, which would be a good thing. I'm here on Green Street Advisors looking at the real estate market. We have seen a confirmed downtick in commercial property prices. Now, this is only as of March of 2020, so I'll be very interested to see how the next couple of months track out. And as you can see, it takes a while for prices to decline in the real estate market. So we peaked here in August of 2007, and then it took almost a full year to get about a 12% decline, right? And then the bottom really fell out. So real estate prices do tend to move a little slower than the stock market, right? The stock market crashed 30% in less than 30 days. I have my eye on real estate for real estate opportunities as well. So considering that here, this is my outlook for the stock market, how am I positioning myself? Well, I'm really looking at treasury bonds to provide a hedge here. So we're at a key level here. And if we break higher, you can see here I have an alert, then I'll be considering to purchase on the breakout with this being my target here. Now, if we don't break this level and we roll over, then I would be either looking to get in here at this level or maybe a little earlier here. So it really depends. We'll see how this plays out. I did read an article that said the Fed is cutting back on their quantitative easing, which means they're buying back less bonds. But we'll see. If the market starts to go down, stocks and bonds are usually inversely correlated. So this would actually provide a really good hedge for the portfolio. Looking at the VIX, which is the volatility S&P index, we can see that's been on a downtrend for a while. I do have another alert set. If we start to break out of here, that risk is, or fear rather, is coming back into the market, and that we should be aware. Looking at oil prices made a new low. This is not really a market that I will be actively trading, but maybe over the longer term, maybe after a few months or so, and we can evaluate, maybe I'll be interested in purchasing. But for now, I'm staying away. Something that I'm watching actively here is gold. I think this is the perfect environment for gold to do well. Gold has been in a bull cycle now for some time, ever since 2015, 16, right around there. From these lows, gold is already up 60%. And so what I'm looking for is a break of the all-time highs and to start a new bull trend, right? Gold in 2011 was trading for $270 an ounce. By the end of 2011, it was trading for 6 times that at almost $2,000 an ounce. So that's what I'm looking for. So I'm looking to play this longer term trend to the upside. I believe we may have topped out here, and so now I'm looking for buying opportunities either here at this 1650 level, maybe the 1550 level, but really whatever, or even right here, you can make a case for buying at support. The point is, I'm looking to buy gold for the long term, as well as silver. Silver has been a great play as well, a little more volatile, of course. It crashed about 30% along with the stock market. I did add to my positions here and a little bit here, and I actually did take a little bit of profits here, but again, leaving most of my position to ride for the long term. As you can see, silver has seen $40 an ounce prices in the past, and so I think once gold starts to make new all-time highs, people are going to say, wow, people are going to think gold is too expensive, honestly. If you walk into a store and you have the choice between a $2,000 gold coin and a $20 silver coin, I think a lot of people are going to choose the silver coin just because they simply can't afford to buy gold. So moving on now to the crypto markets. I'm looking here at Bitcoin. If we go to a weekly chart, we can see that Bitcoin has, again, these big boom and bust cycle. The question is, are we about to start a new cycle in the midst of this recession where central banks continue to debase their currency, They're printing money out of thin air. People are starting to wonder what is money, and that is why gold is doing so well, and that may be why Bitcoin has a resurgence in the next couple months, maybe in the next couple years, right? So we're coming up upon the halving event very soon. It is less than, let's see here, it's about 23 days away, which means that the supply of Bitcoin will be reduced by half. So I'm looking at this here. This is a lot of resistance here. This is a really key area that we need to break out of. But I think once we break out of here, we'll easily see 8,000 and maybe even a 9,000 or $9,000 Bitcoin. I think at that point we get a little extended. We look for a move back down, and then it's off to races after that. So I am accumulating some Bitcoins. I already have a pretty sizable position, so I'm not necessarily adding to my Bitcoins, but I did recently add to my Ethereum holdings here because of decentralized finance and everything that's going on there. A lot of Ethereum is very nice. It's similar to Bitcoin in that it's a cryptocurrency, but it also has a lot of benefits because you can actually use it for other things than just holding it, right? So with Ethereum, you can trade it, you can lend it, you can make smart contracts. There are a lot of very cool things that you can do. And so one way to measure that type of activity is through this website here, DeFi Pulse, which is really for decentralized finance, which has to do with all these, derivatives, lending, decentralized exchanges, lending, tokenized assets, payment networks. So the list goes on. Insurance would also be something that I add to the list. And as you can see here, let's look for April of 2018. Just about a year ago, we had $100 million locked in DeFi, and now we have $700 million locked in DeFi 2 years later, right? So a 7x growth in 2 years. That's 3x growth per year. Those are very good growth numbers, and so I'm looking at this. I think this continues to grow and eventually grows exponentially. Ethereum is probably one of the best ways to capture the growth in the market. So we'll see how this plays out. I wouldn't be surprised. Also, if the market goes down, I think Bitcoin or Ethereum could easily do something like this, and then we continue back up. That would be, my outlook. But my long-term outlook is very bullish on this. And as you can see, Ethereum here, I'm looking at the Ethereum Bitcoin chart, has definitely been outperforming, but maybe looking a little toppish. So I'm a little cautious there too. Other coins that I'm looking at is Tasos. I own a good amount here of Tasos here. You can see I bought 4,000. Have some other holdings too. Looking very bullish. This is one that I plan to hold for the long term. It's currently a top 10 coin on CoinMarketCap, and I think that we'll see Tasos be a top 5 coin eventually, replacing things like EOS, Litecoin for sure, and XRP as well. So anything else that I'm looking at? Another coin that I'm looking at is Atom or Cosmos. I bought in a little early here, but I think if we're forming a bottom here, then I think this is a good place to be buying. To the all-time highs would be, an 86% gain, and that's about it. So I'll leave you with that. Again, going back to the market, I think we definitely have room to go a little higher, maybe to here or to here, but I'd be careful buying at these levels, especially as the elections come up, more uncertainty, and the risk that another outbreak of the virus comes along after quarantines are ended. So I'm not too concerned of missing an 18% move back up to the highs, but I am concerned to participate in a 25 or 40 or 30% decline and have that strong kind of drawdown. That's not something that I want in my account. So I hope that helped. If you have any questions, feel free to reach out to me. I also have a trading group that you can join. Go to my website here, Straightwise Advisors, Noah's Market Update. I'll leave a link in the description. You can join our WhatsApp group and get these alerts via email. And so I hope that was helpful, and stay safe out there. Bye.